Greenstein, Rogoff, Olsen Company, Top 10 Year-End Tax Planning Tips. Number 1. Review your income, expenses, and potential deductions. Before you can make any changes or adjustments, you should carefully examine how much you make, how much you spend, how much you save, and what can be deducted. Number 2. Sell loser stocks to offset gains. This year's wild stock market ride may have given you a mix of winners and losers in your portfolio. If you have big capital gain, consider selling some of the dogs. You can erase your tax liability on the gain with the corresponding loss. Number 3. Put the maximum amount in your retirement accounts. Bump up your 401k contribution so that you're contributing the maximum allowed. Amazingly enough, these payroll deductions can increase your take-home pay because they reduce your taxable income. If you haven't been contributing the maximum, some employers allow you to catch up for the current year. Number 4. Pay off those deductible expenses before year's end. If you pay off your state taxes or property taxes early, that accelerates your federal deductions. You can make an extra mortgage payment, the interest is deductible, or go for that dental work or surgery before year's end. Number 5. Think green and take a tax credit. The government is happy to help out those of us who are more energy efficient. If you plan to make your home more energy efficient within the next 2 years, you can get up to $500 in tax credits. There are additional tax credits up to a maximum of $2,000 that may be available for the installation of solar panels and an equivalent credit for investing in solar water heating system. Remember, you can't use these systems to heat your swimming pool or hot tub. Number 6. Beware of the alternative minimum tax, or AMT. Sometimes accelerating deductions can cost you money if it triggers the alternative minimum tax. Originally designed to make sure wealthy people paid their fair share of taxes, the AMT is now creeping into the middle class, and that can be a particular problem for people who are not used to figuring out the sticky tax issues. Number 7. Prepay your state and or local tax. If you expect your income to be lower in 2007 and you're not affected by the alternative minimum tax, you should make additional state tax and local payments so that you can take the deductions this year. Number 8. Make charitable contributions. If you have extra cash, donate money to charity. Save the receipts and use charitable donations as deductions on your tax return. If you have appreciated stock that you've held for more than 1 year, you might want to keep the cash in your pocket and donate the stock. You'll avoid paying the tax on the appreciation, but will still be able to deduct the full value of stock. You win, your charity wins, the only loser is Uncle Sam. Number 9. Don't overlook tax credits. Tax credits are much more valuable than deductions, so don't overlook any of them. Here are just a few of the most common credits. Child tax credits, $1,000 per qualifying child under age 17. The HOPE credit, up to $1,500 per student for qualifying tuition and fees paid on or on behalf of the student. The lifetime learning credit, up to $1,000, and part-time students can qualify. Child and dependent care credit. If you pay somebody else to care for your child under age 13 to allow you to work, you may use up to $3,000 of the expenses paid in a year for one qualifying individual or $6,000 for 2 or more qualifying individuals. Adoption tax credit. If you have recently adopted a child, you could be eligible for a credit up to $5,000 per adopted child or $6,000 per special needs child. Number 10. Being married helps. Even if you tie the knot at 11:59 p.m. on December 31st, the government still considers you married for the whole year. Look at your new spouse's income and or lack thereof when doing your tax projection. Many of the calculations the IRS makes are based on the taxpayer's marital status. We at Greenstein, Rogoff, Olsen Company are experts in individual and business tax law. Call us today and see why some of the most successful entrepreneurs in Silicon Valley and the world use our services.